All right, welcome everybody to today's teachable moment. It's Friday, August 4th, and guys, what I have for you today is a trade that we actually broke even on the Swiss Franc on a 4-hour level. We're in a daily uptrend, and we broke even on this trade. So the question is, did we make a mistake? And this is what I want to say. Every time we get into a trade, whether we're profitable, we break even, or we take a loss, we always review it to find out, did we make a mistake? Would we do anything different? And the important thing here is to do it objectively, all right? Doesn't matter about your P&L, doesn't matter about the amount of money that you could have made or lost. Did we make a mistake here? And in this video, I detail out everything that I'm thinking about taking this trade and why I took the trade the way that I did. So I hope you enjoy this teachable moment. All right, guys, so welcome back to today's video. It's about noon here on Friday, August 4th, and kind of want to go over a review that we had on the 6S trade that we took, and unfortunately, we got stopped out at break even, but what I like to do here is I like to go back and I like to review, did I miss anything? All right, this is something that you guys should be doing in all of your trades, whether you're taking a winning or a losing or a break even trade. So let's dive in. I'm going to go to a daily chart here, okay? On the daily chart, we can see that we're in an uptrend, higher highs and higher lows along the whole way, all right? And so when we're in an uptrend, we've breached past this area, which we have a critical area here as well, okay? These previous highs are critical, so I'll put that out in purple so we can kind of mark that as well. And when we're in an uptrend, we want to look for... Here we go. When we're in an uptrend, we look for 1, rally-based rallies, or 2, rally-based drops. Okay? So, first things first is the line of least resistance. Once we have that line of least resistance, then we can look for our levels. So we know the line of least resistance is upwards, so we want to get long. That's the only way we're allowed to trade on this larger time frame, okay? So we found a rally-based rally, and it's not the best rally-based rally. I would like to see big expanded range candles out of here, but it has massive follow-through. Look at how far we go, right? But those first couple candles out of there, we kind of pause a little bit before we go. So that's A, all right? B, the approach down into it is kind of stair-stepping into it, right? We have lower highs and lower lows coming in. It's not a straight shot in. I don't like catch falling knives, but I do like better approaches than this. So that's number 2. Number 3, when we do eventually hit our level, the only reason why we got long here was because we had some type of divergence, right? We have a lower low in price and we have a higher low on the indicator. So what I did was I only took a very small position of 2 contracts, all right? Now, if everything was going, if we had trend, levels, approach, momentum, fibs, 8 and 89, all of these things in our favor, I would probably take like a 8 or 10 contract trade here, right? So we reduce our risk by taking a smaller position. Even though we have the divergence, we're still below 40. All right, we're stair-stepping in. So we are minimizing our risk here because it could have easily been sliced through, right? But we still have that uptrend. We want to take advantage of it. So this was our first target. Why was my first target here? Well, a couple reasons. Number 1 is it's about 3 to 1, so that meets our requirement for our first target. But number 2 is when we come into a level below 40, we want to take our first target below the area of the most recent rally-based drop or drop-based drop. And what do we have here? Rally-based drop. Drop-based drop, retest down inside. So the prudent thing to do is to put my first target here. And I'll tell you why this is important, okay? It's important because where I set my first target is where I'm going to set my halfway so I can move my target to break even. So what we did was we bought here, and about 4 hours later, we hit halfway to our first target. So I moved our stop to break even, okay? Right here. This is our break even. Right above it, just a couple ticks above to cover the cost of commission. And what did price do? It came back, stopped us out at break even, continued the divergence, and then boom, there we go. All right, hit T1 yesterday at 9 a.m. And now it came back, and now it's going up. So we got stopped out of break even versus hitting at least $1,000 on this trade on the first target, right? And we would have been trailing our stop if we were still in this trade on the second target by now. But the question is, did we do anything wrong here? Okay? Did we make a mistake by making the moves that we did? This is something we have to ask ourselves objectively. All right? And when I look at that and I explain to you what I just talked about, I don't think that we made a bad decision here. Okay? I don't think that we made a bad decision here. Yes, we might be wrong. Price could totally go up, but we're going to be able to get other opportunities on perhaps smaller time frames along the way if the dollar is going to continue going down and the Swiss franc is going to go up, right? But the key here to remember is when we are coming into a level, we have to reduce risk. And we do that in the form of putting our T1 where they're supposed to be, in the form of less contracts, in the form of only taking a trade into a level where we're stair-stepping down if we have divergence. And I would do this same trade 10 out of 10 times. I don't think that I would do anything different. Yes, price is moving up. Yes, perhaps we missed out on it. But objectively, I believe that we made the right decision. So let me know if you guys have any questions about this. We're going to find more opportunities along the way. But this is a way that you can mitigate risk. And sometimes breaking even is okay. One thing that I know about the markets is it always provides opportunities. And that's what we're going to continue to look for. But it has to match our rules following our technical analysis strategy outlined in the 8-week accelerator. All right, guys, take it easy. Hope you have a fantastic Friday.